Oil exploration companies ONGC and Oil India dip after crude prices fall 4% overnight. Brent trades near three-year lows, $70 a barrel, just below that.
Meanwhile, oil marketing companies HPCL, BPCL and IOCA, they reacted positively to the fall in crude oil prices. However, all stocks have come off the high point of the day. One of the potential reasons could be there are state elections in the offing, which could be weighing on these stocks.
On the other hand, the beneficiaries of lower crude prices include the likes of Asian Paints, Berger and Kansai and Nerolac, as crude price decline would aid their margins. And ahead of the festive season, there is expectation of strong demand as well. These stocks gaining anywhere between 2 to 2.5%.
Sambada Motherson slips as a key client. BMW cuts its profit margin guidance, citing sluggish Chinese demand and supply chain issues. Tata Motors also corrects as supply chain issues linger and UBS issues accelerating on concerns over steep Jaguar Land Rover discounts.
Century Textiles surges over 7%. Remember, yesterday it acquired ownership rights of a 10-acre land parcel in Mumbai with a revenue potential of close to 14,000 crore rupees. So today is a follow-up move that we're seeing on the stock.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. With me, as always, is Mangalam Malu. Well, Mangalam, as we speak, it's a actually good-looking screen. And I say this because intraday we did get a bit of a dip in the morning. We were down roughly around 50 points. That dip got bought into. The breadth of the market is still in favor of the number of stocks advancing. And though you have the global markets a little bit sluggish because they're worried about this, anticipating a recession, but crude oil prices are lower. And I think from an India market perspective and macro perspective, it's a positive.
It's a positive. All macros working for us, Nigel. What remains to be seen is, will there be supply at higher levels or not? Yes, the dips are being bought. Yesterday as well, we gave up about 90 points from the highs, a little over that 25,130 mark. And in the second half of trade today, we will have the Nifty Bank options expiry play out. And it's the 51,400 mark, which has the 50-day moving average in the Nifty Bank. Let's see whether we cross past that formidably or not. And would there be a case for short covering in the second half? No problems for the broader markets. Yesterday, the market breadth was firmly in favor of advances. And today as well, after a bit of dilly-dallying, the crisscross lines come up for you right now also. Almost 1,400 stocks advancing for about 976 stocks, which are declining on the National Stock Exchange. Good time to get in Sony Patnaik of JM Financials for a quick technical check on the market. Sony, the last 3 days, something that has stood out is the fact that we've been recovering from the lows. On Monday as well, we rallied from the lows in the last hour. Yesterday, right from the word go, we were doing extremely well. And now today as well, the dips have been bought into. The question is, where do we go from here? What are the levels that you're tracking?
Good morning, Mangalam, Nigel. Thank you for having me on the show. So I think rightly pointed out, 25,130, 25,150 acts as a crucial resistance for intraday. Only a move above this, we can see some short covering in Nifty towards 25,300 plus levels. I think that's the level to watch out for. There's significant call writers still positioned at 25,100 and 25,200 call options. So I think that's the reason why the resistance still continues. On the put side, we can see the writers are forming a base around 25,000. So heading into tomorrow's weekly expiry and today, so I think 2 days Nifty may remain range bound between 25,000 to 25,100, 150 at max. Either side of the break of levels only can determine a further trend. I think any break below 25,000, again, we can see it sliding towards 24,900 as well. I think it's quite in a tricky zone as of now. It's completely sideways and we'll have to wait for the levels to cross. I think Bank Nifty is the only hope that we can have some right now. If Bank Nifty is able to cross 51,500, 51,600, it can test 52,000. So I think all eyes would be on Bank Nifty as tomorrow weekly expiry options plays out for Bank Nifty.
Okay, all right. It's a little tricky out there, but you're saying it could be a stock-specific market. So let's get straight to the stocks then, Sony. Tell us what's on your radar.
Absolutely, Nigel. Stock-specific market, and we can see the first pick would be in the capital goods space. That will be Siemens, which has seen a very strong bounce back from current levels. We can see it reversing. So in futures, one can buy Siemens with a stop loss of 65.80 and a target of 68.30 and 68.50 can be seen. So it's a first pick. The second pick would be from the consumption space, United Spirits, which has also seen a fresh breakout today. So one can buy United Spirits futures with a stop loss of 1510 and a target of 1560, 1570 for a short-term positional play.
All right. The big trigger for all these alcohol beverage companies would, of course, be the Andhra liquor policy, which comes into effect from October 1. That's the expectation, nothing formalized yet. But I think the near-term big trigger would, of course, be tomorrow, Nigel, the big day, your birthday. Are you tanking up on all of these? Because I see United Brewery is doing well, United Spirits doing well. And for guests like me, I think you've bought a lot of soft drink as well. Pull up Varun Beverages. Varun Beverages has spiked to the high point of trade as well. So Nigel's taking care of all and sundry. I'm sure if some sandwich stock was listed, you would go ahead and, see some traction there too. Varun Beverages up 4%. I wouldn't mind, some Pepsi. You have United Spirits and United Breweries, all of them doing extremely well.
I think this birthday is going to be with a difference, Mangalam. But on my birthday, I never say no to anything. So, the list is out there. I mean, choose what you want and it'll be yours tomorrow.
Oh, but choose what I want and will it be mine? Titan, just pull up Titan. That stock has moved to the high point of trade as well. So maybe I'll ask you for some jewelry out here. No, just kidding. But Sony, you're invited too. Is there any request that you have from Nigel?
Absolutely. And wishing a very happy birthday, Nigel. I think if you're stocking up any from these stocks, please let know. I'll be...
All right, we look forward. We'll have a catch-up for a drink soon. Sony, thanks a lot for joining in. And I'm looking forward to my birthday as well tomorrow. Thanks a lot for that. Well, let's turn our attention to our special segment where we get you a few ideas for profit from Money Control Pro. Anand Chowdhury of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anand, take it away.
So today's stock idea is Shivalik Bimetal Products Limited, a leading manufacturer of bimetal parts and shunt resistors used in industries like switchgears, smart meters, electric vehicles, and electronic devices. With a 85 to 90% market share, Shivalik is India's largest supplier of thermostatic bimetal in India and a global leader in ultra-low ohmic shunt resistors, having the world's largest capacity in place. Shivalik operates in an industry with high entry barriers due to lengthy product approval cycles and the niche solutions required by OEMs. The company is the only Indian manufacturer with approved shunt resistors for smart meters, positioning it well to benefit from government's Smart Meter National Program, which aims to replace 250 million conventional meters by 2026. The rising adoption of electric vehicles further boosts demand for shunt resistors in battery management systems. Despite facing headwinds from slowdown in the North American automotive and electric vehicle market over the past few quarters and a decline in realization due to passing on lower raw material cost benefits, domestic demand remains strong. With substantial government capex plans and initiatives like smart cities and Make in India, the outlook for Shivalik's growth looks very promising. The stock trades at 29 times on FY26 earnings, offering a reasonable valuation given the company's growth potential.
All right, that's about Shivalik. But just before we slip into a short break, pull up the intraday chart of Shoppers Stop. Something's up out there. It's up 14%, a big surge is what we've seen. Majority of the gains coming by in just the last few seconds, and that too with huge volume. So 5.5 times, volumes, what we see on an average day have happened in the first hour of trade itself. That's about Shoppers Stop, a 13% up move on that counter. If you look at the last few days as well, the stock has been buzzing around. Maybe, a turnaround in the retail sentiment working for them. We've seen attraction in names like V-Mart Retail, V2 Retail, etc. as well. Last 7 days, it's up 16%. But pull up a monthly chart, you would see a decent traction on Shoppers Stop. Their first quarter numbers weren't that bad particularly. Just keep an eye out on Shoppers Stop. This month, this year, it's up around 33 odd %. Take a short break, come back. On the other side, we'll talk all things about commodities, focus on crude prices, the big decline that we saw overnight, and the stocks that are impacted by the fall in these prices. Welcome back. We spoke about Shoppers Stop just before we went into break. Just look at Zaggle Prepaid. That one too has followed suit, now up around 10%. Most of the gains coming by in just the last few minutes. So that's a stock which also is buzzing with a fair amount of volumes. But overnight, the big news was crude prices having slipped to near 3-year low, with Brent trading below $70 a barrel. This after the OPEC cut its demand guidance, and this for the second time in 2 months. Manisha joins in to tell us more. Manisha, what's up?
Oh, well, absolutely. Such a sharp decline continuing in case of the crude oil prices. When you look at the last 2 months, which was July and August, the crude oil prices were trading in the negative. And September has begun on an even weaker note 4% of decline yet again in the overnight markets, and we've broken below that very important psychological $70 a barrel mark for the Brent prices. And with that, we're trading at a 3-year lows right now. For the month of September, we are already down by 10%. And when you look at the third quarter itself, the crude oil prices are down by almost 18%. This is after the OPEC has cut the demand forecast for a second time in 2 months. Now, when you look at 2024 and 2025 as well, the OPEC believes that you could be looking at a lower demand at 2.03. This was 2.11 earlier, and this 1.7 was 1.78 earlier. So we have seen a demand decline forecast come in from OPEC. Apart from that, it also has to do with China. Every data that has come in from China has been on the weaker side. The crude oil imports for the month of August declined for a third straight month. And then you also have weak China consumption that has been going on for many months now. The EV demand, EV production and sales are now a 50-50% in sense of automobile fleet. And that also seems to be putting an impact. Apart from that, the Asia refinery margins also are at a multi-year lows, at lowest since 2020. And the analysts do predict that you could be looking at a potential oil surplus by the time you are in 2025, again weighing onto the prices. Well, the hurricane season is on, and that perhaps is the only thing that is giving some support to the prices right now. Otherwise, we have seen lower lows in case of crude oil prices. Franchai now is a Category 1 hurricane, is expected to make a landfall in Louisiana today. And before that, much of Gulf of Mexico, whether it's Shell or BP, have evacuated or partly shut their positions there. Well, Gulf of Mexico is an important area because 15% of U.S. oil production happens here, 60% of U.S. refining, and 2% of natural gas output comes in from Gulf of Mexico. So that bit of an opportunity buying that you are seeing right now in the Asian markets clearly comes in from this one. Apart from that, it is also going to be about the U.S. weekly inventory data that comes in today. But the API data yesterday suggests that you could be looking at a drop around 2.8 million barrels. Those are a couple of factors which really seem to be supporting. But this is what the crude prices have done in this year until now. From the highs that we saw in the month of May, the crude prices have continued to decline. So from 91, we are trading at 69 right now for the Brent, and the WTI has gone up to $65. This is more than 20% of a decline from its highs. On textbook levels, the crude oil prices have gone bearish, slightly oversold as well in the way that we see for the month of September. So some support levels could perhaps be seen at these levels. Importantly, you have the US CPI numbers coming in today. PPI data comes in tomorrow, and that would set course of where the crude prices are headed for the very near term.
All right, Manisha, thanks a lot for that. Well, let's also hear out Union Minister Hardeep Puri, who's welcomed the recent decline in crude oil prices. Speaking to Shireen Bhan at the India Energy Transition Summit, Puri also said the cost of oil is higher due to artificial scarcity. Puri added that the government is not looking at higher taxes on fossil fuels at the moment. Let's hear him out.
Ultimately, demand and supply.
Yes.
And I was very encouraged by your reference just now to OPEC having decided not to undertake production cuts. Hey, wait a minute. We had a production daily of 102 million barrels per day.
Yes.
They reduced their production by 5 million. I've seen statements by OPEC Plus to the effect that they will unwind those production cuts. Now, I'm on your side. If after the drop in oil prices, will they still, and I'm not tempting anybody, but I'd like to see, because they've told me at a bilateral level that they will, unwind. There are two things that I'm interested in. There is more oil in the market available. There's no shortage of availability. The price levels are maintained essentially on account of artificial holding back.
Right.
If the total amount of oil which is available in the world is allowed to be available, then I think we'd be in a slightly more comfortable situation. We have so far, Shireen, navigated the terrain reasonably well.
Okay, all right. Well, let's stay with crude oil prices. Then oil marketing companies are in focus following the fall in crude prices. Sonal is here to tell us more about that. Sonal?
Thank you so much for that. Well, yes, the big story, crude oil prices at 3-year lows, and that a level we've not seen in a long time. Let's talk about the impact on different stocks. The first one, of course, has to be oil producers, the likes of ONGC and Oil India. Lower crude prices means negative trends for them. And remember, all these stocks, they have been trading at realizations of $75 per barrel barrel despite windfall taxes. Nuvama put out a note where they say earnings impact for FY26 could be as much as 24% if oil prices fall by $10 per barrel below that $75 per barrel mark. And not only oil prices, even the gas prices, they are pegged to Brent crude prices, right? So from next year, we are going to see an increase in the ceiling. But if crude prices continue to decline, we could see a cut in gas prices as well. So that would be negative for both the segments, be it oil or the gas segment for these companies. Oil marketing companies, of course, it's a significant reduction in their raw material prices, so that would bode well for their margins. UBS had put out a note where they say that the integrated margins for diesel and petrol, it could see an improvement of around 2 rupees per litre sequentially in the September quarter. They are already trading at elevated levels. Right now, trading around 16.2 to 17 rupees per litre. These are the margins together, both for refining and marketing. And this compares with levels seen between 10.5 to 11.5 rupees per litre. So there's already a bump up, and there could be further elevation to these marks as well. However, if it is because of demand, the price fall, that would not bode well for all the segments in the industry.
All right, take that point, Sonal. Thank you so much for that. With that, we'll step into a short break. Up next, the government notifies major changes to the highway toll collection system. We'll get you more on this story on the other side.
Welcome back. Well, just focus at the bottom of your screen. I think we should put up this flash. The government has imposed countervailing duty on Chinese welded stainless steel products. So we'll have to find out how much of the entire product line gets protected because of this. But that's some kind of protection that's coming for the stainless steel industry. The management had told us here on CNBC-TV18 that they're looking at some kind of protection that's coming in there. So Jindal Stainless, at some point of time, we'll get the stock up with the news flow as well up on the screen. So let's pull up the stock and let's see whether or not we can get that flash as well. Currently moved to the high point of the day. And the reason is that there is some kind of countervailing duty that's imposed on Chinese imports. Well, let's move on then. The government has notified major changes to the highway toll collection rules. The new rules will allow users to pay based on the distance they cover with no toll charge for up to 20 kilometers. Abhimanyu Sharma is here with more details. Well, Abhimanyu, what are the rules the government has implemented and how does this change things?
Global Navigation Satellite System On-Board Unit. That's the biggest change in the new toll collection regime, which has been initiated by the Ministry of Road Transport and Highways in a fresh notification which has been issued by the ministry. The way toll fees and toll taxes collected is going to change across the country. Now users will have to pay only the toll for the length of the road they have traveled. This is slated to reduce jams, bottlenecks on highways with respect to traffic, and also possibly lesser confusion with respect to altercations and arguments which often happen with local residents and villagers over use of toll roads which are connecting nearby settlements. Under the new regime, this GPS unit would be fitted into every vehicle, and based on that itself, the toll fees would be collected in a change from the current system in which the toll fees used to be collected only at a toll booth for the entire road ahead, irrespective of the fact whether the vehicle used to traverse the entire road or not. Also, there would be a dedicated lane for such GPS fitted units, and any vehicle which is not compliant with the latest system will have to pay double the fees if at all it uses the compliant lane.
All right, it will be very interesting to see the implications of this and also the modalities of how it functions and the ecosystem which has already been developed around the toll collection system of the country, including the likes of FASTag, etc., how that pans out. We'll need some more clarification on that one. Trust you to get us all of that and more on this, Abhimanyu. With that, let's get you some views on markets. Gautam Shah of Goldilocks Premium Research believes that the market is looking a little exhausted after a stellar rally. Also lists out his favorite commodities going ahead. Also believes that there could be an upside, a further upside, 10 to 15% on the IT space.
That the market is looking a little exhausted. I think the up days are not as strong in terms of momentum and participation. In fact, the down days last week has been a lot more stronger. So I think the numbers are very clear from a short-term perspective. 25,150, I think is an important barrier, which we hit yesterday at the highs. And 25,500, 600, according to me, is a sort of a ceiling for now. And I'm not looking at any number beyond the same for the time being. On the downside, I think the 24,800 area is an important support. If that were to break at any point of time, you could possibly see a 5% dip on the Nifty. On the other hand, if you look at gold and silver, they remain absolutely steady on the charts. In fact, I do believe that gold will go on to do very, very big things over the next 6 to 12 months. And that's been our stand for the last 18 months. I think over the next 12 to 18 months, you will see a $33.50 on gold, which is a nice 25% rally from where we are. And I do see a similar 25 to 30% upside on silver coming in. So at levels of 28, 28.5, I think the downside is very limited and the upside is large.
Well, time to wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.